Hello and welcome to Filling Gaps for Clients and Lenders, a Loan Whisperer podcast production. Today's video we're going to discuss what is the gap or the donut hole in funding. We're going to talk about some solution products to fill that gap. We're going to discuss how it works, and we'll leave you our contact information if this is of value to you. So what is this gap or donut hole that is talked about in funding? A gap or a donut hole is created in asset-based lending when asset coverage leaves a gap to the client funding need. So what I mean by that is in asset-based funding, you typically have a value of the asset, you have a loan amount percentage that is going to be lended against that value, and that is your facility availability. And I'll talk about the difference between facility size and availability at the moment. So let's just give an example. I think that's the easiest way to understand this. So if you have $1 million in assets and there's an 80% LTV that's going to be loaned or available in line of credit against those assets, and you have $1 million need for capital, that means 1 million in assets times 80%. You're going to get 800,000 from that initial or primary funding. And you still have a $200,000 need to get to your $1 million. That's the gap that we're talking about. So facility availability is your assets times whatever LTV the lender will advance or loan against. That's facility availability. Facility size is simply a number that says it cannot exceed this amount. So really what we want to be talking about, what's your current facility availability and what is the gap to your need? Our gap investor solutions are derived from things like other assets, maybe second or additional positions on the existing assets, could be cash flow driven solutions, or it could be a credit driven solution. The gap we fill is 50,000 to 500,000 typically, but we do have the capacity to go to 5 million. So that's what the gap is, or the donut hole, if you would. Our solution products include, but are not limited to, real estate. We've got hard money, bridge loans. We have some traditional mortgages, perhaps we can do a refinance with. There's some SBA solutions out there. There's some second mortgage options. Equipment solutions, we have things like sale leaseback, we have term loans available, we have revenue-based products, credit-based only products, and so on and so on. It's really about having a portfolio of solutions geared to meet that gap and not interfere with your first position or senior lender. We want to coordinate with them, not compete with them. I look at it this way. You know the old saying, if you have a hammer, everything looks like a nail. We don't want to do that. We want to have a toolbox or portfolio of solutions. So if something is other than a nail, we have a tool or a solution to fill that gap. That's really how we approach the gap solution. You have one single point of contact with us. That's your Loan Whisperer lead, coordinating funding sources and ultimately the solution. There's a powerful need out there. I mean, this 2016 survey is a year old, but 62% of businesses are finding it difficult to get the funding they need. To discuss your individual need or learn more about our commercial and investment funding options, please contact Mike at 844-249-3621 or visit www.loanwhisperer.org or email mike@loanwhisperer.org. Thank you.